Today, we're joined by Dan Wilton. He's the CEO of First Mining Gold. We're going to talk about potential catalyst in the overall gold and silver market, but we're also going to talk about an exciting potential catalyst with his company, some recent drill results which were released. Dan, welcome to Ron's Basement.
Ron, always a pleasure to be back in the basement, even if only virtually.
Well, it's an honor for us to have you here on behalf of myself and my viewer. It's always great to get your insights. And before we came on, Dan, I was looking at a 6-month chart of the gold price, and I noticed something interesting.
What's
Right?
that?
Like we have $2,300 gold. Um, but the first 3 months of 2024, it seemed like we had a gold price on average, maybe 2,000, 2,100. But for the last 3 months, and we're almost at the end of June here, we've had $2,300 plus on the gold price. Do you think that when the big mining companies put out their results from the second quarter, do you think that we could see some very impressive profit and cash flow numbers coming through?
Ron, it's going to be record profit and cash flow numbers.
Yeah.
These gold miners are coining it right now. I will tell you honestly, I don't think the margins have ever been stronger.
Mm-hmm.
I don't think their balance sheets have ever been stronger. You know, we had this as the gold price ran up to 2,400. We had a number of those mid-tier gold companies, like really the last of the ones that might have needed to have finance to repair a balance sheet or provide some more flexibility. They've kind of, I think most of their houses are in really good order right now. And you still have even those companies trading at levels that we've never really seen gold companies trade on a free cash flow basis. You know, you think back to in the bull market cycles, like, you know, they're trading at much higher multiples back
Mm-hmm.
then. We're just at the early stages. Again, this is a sector that hasn't seen the capital inflows come in. And, you know, one of the most interesting points, you look at that 6-month chart, map that against the GDX and the GDXJ, and then come to understand, Ron, this is the part that really gets me. With the gold price having sort of pushed up from 2,000 to 2,400, you had outflows out of the GDX and the GDXJ. You had people taking their money out of your large and your mid-cap gold miners.
Yeah.
That has never happened before, Ron. That's an absolute market anomaly. And I can only chalk it up to the fact that is the sign, a very clear sign of a bear market bottom, right?
Mm-hmm.
That's what happens when you've had a bunch of shareholders who felt really stuck, and these things jump up by 20, 30, 50%, and all of a sudden there's this rush to get out of it. I've recouped a bit of my losses. That's it. I'm getting out. So, you know, and then you've seen them pull back. You've seen the developers pull back even more. But I think it's actually a really healthy sign. I think what you've seen is some obviously new blood coming into the sector. And I think when you get to this next quarter, which, as you say, is really the first quarter of production at much higher gold prices. And remember, in Q1, all of those companies beat expectation on their financial results. So, you know, literally, I think you're going to see it at unprecedented levels of free cash flow generation in the industry now. So that's going to be good for us, I hope.
Yeah. And there's a theory going around. I'd be curious to get your thoughts on this as well, Dan, that, you know, the gold price obviously has done very well, $2,300, $2,400. And a lot of people chalk that up to the increased marginal demand that was coming from central banks. And a lot of those central banks are in BRICS type countries, you know, Russia, China, India. And that because of the fact that drove the gold price so much higher, you have to consider the fact that people in those countries and the central banks, they only buy physical gold. They're not, you know, they don't buy gold mining stocks. And especially the individual investors in those countries don't really have access to Canadian or US based gold mining stocks. So we've had this big run up in the price, but really in the West, there has been subdued demand for physical gold and subdued demand, obviously, for the mining stocks. But are we at a point now where when the results come through, it's going to be impossible for the Western investors to ignore just how compelling the opportunity gap is between the metals prices and where these stock prices are, that it could maybe potentially be a catalyst for more attention coming into the sector in the West? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I think it absolutely will be. The reality is, particularly for people investing in the larger cap stocks, most of them are performance chasers, right? And it's natural. Most investors are performance chasers. So, you need to see a little bit of performance before you say, oh, well, I've been underweight materials in my portfolio, particularly coming out of a recession, whether we're coming out of or coming into a recession, depending on your perspective, coming out of an inflationary environment or going into an inflationary environment. I don't think we quite know yet, but that's a whole other story. Another reason why you should own gold and silver, by the way, but
Yes.
we'll leave that one alone. No, I think they've just been so underweight, these equities, for so long. There's such a small percentage, particularly in the US, there's such a small percentage that any little bit of portfolio allocation towards this sector is going to see, it's massive relative to the size of the sector. And that's what we've seen in past bull markets. You go back to, kind of 2004 to 2011. It was just new allocation coming into what was then basically a China-driven commodity super cycle. And that macro theme brought some money in. And similarly, in the gold space, you had a couple of triggering events that had the gold price running as well. Same kind of reasons why it's run up now. The difference this time is that as the gold prices run, you haven't had that money come in. You had the money go out, which is remarkable. Never really seen that before. So that to me, it's a super, super bullish sign. We're going to come through, and listen, if it's not this quarter, it's the next quarter. If it's not the next quarter, then like by the end of the year, the gold price holds up and people start really believing that this is the baseline, gold price for some of your assumptions. You got to remember, like a lot of the long-term price decks that analysts use on gold companies are still, $1,800.
Yeah.
And are we going to see $1,800 again anytime soon? I don't think so.
And if more attention is paid to the mining stocks, just a little bit of improvement, like you said, in terms of Western allocation, that could also then potentially feed through to the metals as well, because people are like, oh wow, these gold stocks are really moving, and they're not really moving. They're just kind of initially it's going to be getting back to where they should be already. That might even, it might be kind of a self-feeding cycle where they think, wow, we need to look at physical silver and physical gold as well, because again, in the West, I mean, there is nobody buying precious metal mining stocks, and there's hardly anyone buying the physical metal. So to me, that's actually a good thing, because it offers so much room for improvement. Like you said earlier, if you've got 1% of capital, or it's probably less than that, but 1% of capital allocated to precious metals in the United States, if it's a lot easier to go from 1%, or it's a lot more of an impact to go from 1% to 3%, right? Than going from 3% to 4%. I mean, we could see I like to call it the law of small numbers that actually works in our favor. So we could be in for some exciting times.
I think that's exactly right. I think that's exactly the environment that we're sitting in today. There's nothing that has made the gold price and the silver price move that is changing anytime soon. I hate to tell you, we're not suddenly going to find peace in the world, much as I really wish that we could.
Right.
I think we're at the very early stages of gold being used as a fundamental, part of a basket of trade that's going to result in the de-dollarization of large swaths of the global economy. Yeah, it's interesting times ahead, but again, I think, let us not forget that what we've actually, a big contributor to the gold price run has been a portfolio allocation switch of a different kind, right? A lot of that has been basically retail gold demand in China, with people getting out of the property market and coming into precious metals.
Yeah.
So, and again, it's sort of on the margin. It's your law of small numbers, but
Yeah.
if a billion people decide they're going to own a few grams of gold, like, it adds up. That's that's where you start seeing some of that coming in. And ultimately it will work its way through into the equities. And then, you take that step down from the producers, it will work its way into the developer equities, because the gold producers really just have, very little growth in their organic pipelines.
Mm-hmm.
And a lot of them are facing down major, mine closings between now and the end of the decade.
Yeah. Yeah.
And so if they can't expand those, they can't find more resources around those projects, then they're going to have to buy more projects. And leads very nicely as a segue into,
in the first mining gold. Yeah, you have a slide on your investor deck that shows the amount of money that's been spent on exploration for gold versus the amount of gold that's actually been found. And the chart clearly demonstrates that even though there has, especially recently, been more money spent, the amount of gold being discovered is down. And as these big companies that are flush with cash, and like we talked about, as if the gold price holds around this $2,300 level and their pipelines are running dry, they're going to need to buy companies, and they're going to need to buy companies like First Mining Gold, or buy projects or partner on projects, just to keep their production profile intact, right? I mean, we're not talking about growing significantly in most cases. So as we look at your company, I know recently, and it was 2 years ago, that you kind of put together this deal for the Duparquet project up in Quebec. And I know that's a super exciting project because there's a past producing mine there. There are roads that go on site. There's a very robust mining community that it exists within. And you were able to piece together a number of different projects for the first time into what has become maybe one of the biggest resource bases up in that area. But you're doing something interesting now with drilling, and put out some news last week. Do you care to share with us kind of what's going on up there?
Yeah, so I mean, we've continued to explore at the property. It's been a staged approach, and we've been kind of ramping up into it as we've gone forward. So a big part of this is, every time you get your hands on a project, we've learned the hard way over years that it is really important that your team kind of goes back to first principles to understand these deposits. It's a process that we went through with Spring Pole, kind of bringing it through the pre-feasibility study. It's a process that we've now gone through with Duparquet, where our geology team has really gone back and spent the time going back to first principles to really understand what this deposit is. And there's a couple of really important things that have come out of this, Ron. And you've been up to the project. There's no shortage of gold there, right? Like, when our starting point at the main Duparquet project is 3.5 million ounces of M&I and about 1.5 million of inferred. We're starting with a pretty reasonable endowment there. But one of the things that we've discovered, 270,000 meters of drilling before we got our hands on it, but 200,000 meters of that 270,000 meters was actually done in a hurry, like in 2 years.
Mhm.
One year where Clifton Star, the previous owner, had optioned it to a Cisco, and they drilled about 110,000 meters, and Clifton had drilled about another 90. What we're finding is, not surprisingly, a lot of that work done in a hurry, doesn't allow for the time to really sometimes understand some of the subtle differences in what people are finding.
Mhm.
That's the fundamental thing that is exciting about this news release that we put out on the drill results last week, is that basically we always have known that there are areas of higher grade mineralization at Du Parquet, but the bias has always been to look sort of at the same stuff that was the old mine, right? Because going back to the 1920s, like it was an intrusive, you could see it, it came up to surface. They never really had to look for any more. There's always lots of gold around. But what we're discovering now is that even in the work that was done 2008 to 2014, where they identified higher grade zones, I don't think they really understood what was controlling those higher grade zones. And in fact, it's kind of, we're finding the best grade. It's now sort of found in two different areas, is occurring on the margins, like on the contacts of this syenite intrusive. So, and in mafic volcanic rocks, which is a different type host rock, potentially more amenable to higher grade just due to chemistry. And we'll get James on; he can explain it all.
Right.
You're taxing me at the edge of my geochemical knowledge right now. But basically, I think what the team had identified as a concept to test has now been proven out with these latest drill results. First of all, basically there's gold from the top to the bottom of this hole. Like 5 different zones of mineralization. And some of them, areas of pretty high grade, and ending at the bottom of that hole in, 33 meters of almost 6 grams. Which would be about 400 meters vertical downhole. So it's 550-ish on a 66-degree slant. So kind of at the bottom of the pit, we're finding these big, wide zones of mineralization. But more importantly, I think, the team, through kind of looking at a bunch of different layers on of the geology data sets, kind of identified these higher grade, plunge, or the controlling plunging control of mineralization, and then these vertical higher grade corridors within it. So I've sort of identified it as a prospect. Now drill confirmed it. And we've got probably another 9,000 meters to go this year. And we've just raised about 7 million of flow through, much of which is going to end up going back to Quebec to continue demonstrating this. Because this is something that I think, we've always said that the resource endowment we had there really was just the beginning, where, we think if we can project some of this higher grade to depth, particularly in the widths that we're looking at, like you can build tonnage pretty quickly on something like that. And if we can demonstrate, we understand the controls and the plunge of this thing, I think you could see significant growth at depth here, and gives a whole other sort of prospect to how Du Parquet might get developed.
Wow. Very, very exciting. I have a question for you, and maybe some of our viewers are wondering this as well. When you say plunge, I pardon my ignorance, but what does that term mean? Is that the angle at which it goes down?
Yeah. So in the news release, there was a graphic that really sort of describes it. So the plunge is sort of the general corridor of the mineralization, like the general trending area of the mineralization. And again, I'm not the guy to talk about it. What I learned, having spent much of 30 years working with very intelligent geologists, is that I see the world in a very 2D fashion, and they see the world in a 3D fashion. So as they describe, dip and plunge, they can see these 3-dimensional, and unless I have it in a model in front of me, like wearing 3D glasses or something, I have trouble with it. But anyway.
Yeah, those little models, they can spin around on the screen. Right. Yeah, I know.
Yeah, it's remarkable. It's remarkable.
So the future looks bright in Quebec. I mean, to me, with what's going on up there, I mean, these drill results are very positive. I did visit it myself. I mean, it's a mining area. I would suspect at some point in the future there's going to be someone knocking on your door interested in talking about doing some work on that project with you.
Yeah, it just the reality you've been there, Ron. It
Yeah,
just doesn't get any better from a jurisdiction perspective, right? Like the operating costs are very attractive. You have, many of the best service providers in the world.
right.
We've had amazing experience with drill crews, very supportive and collaborative community, and lots more really interesting things to work on with the community at Duparquet, who've been very welcoming of the work that we do and kind of the open and transparent fashion that we do it. Yeah, no, it's I think, we put out that PEA last year that I think framed ultimately what the project can become.
Hmm.
But the other interesting thing at Duparquet is I think we're starting to recognize there's probably a staged path that gets you there.
Yeah.
In large part because I continue doing this work because someone told me I was wrong. I've been saying for a long time there's 14 mills within 200 kilometers of the project. I
Right.
found three more like yesterday. Honestly,
Yeah.
things they just had no idea were that close, right? So and in the middle of the heartland of Canadian mining. So lots of really interesting things happening around us. And I think, we're working on a bit of a development scenario here with Duparquet that I think really provides a very different type of optionality for us than Springpole does. I mean, Springpole is by definition a massive development project,
Right.
and there's a target market for that, right? That's something that the industry is going to need. Duparquet, I think you have a bit of a different ability to step into it, which I think can really broaden the appeal of that project as well. So we're working hard at kind of bringing together a bit of a plan, and hope to have something we can talk about here in the near future with respect to
Yeah.
that.
Interesting. Interesting. Yeah, because I know when you refer to Springpole up in Ontario, that really would be, for lack of a better term, more of a standalone operation, right?
Yeah.
Whereas when you look at Duparquet in Quebec with the ever growing number of mills that you're discovering within a short proximity, there's opportunity potentially to truck ore to those. Is that the
Yeah,
potential
that's
scenario?
certainly to get started. I
Yeah,
think ultimately we're going to need a mill at
sure.
Duparquet in large part. We have all of those historic tailings that an important part of what needs to happen at Duparquet is kind of the reclamation of the old mine sites and the old
Mhm.
mining infrastructure. But I think you can do that in a really thoughtful way.
Yeah,
I think it leads to a very, very exciting future for, particularly for the town and the people in the town at Duparquet.
yeah, yeah. Outstanding. Thank you, Dan, for your time and sharing your knowledge on the general gold and silver market, but also specifically what's going on with First Mining Gold. It's always great to have you in the basement. Is there anything that I forgot to ask you during or anything more you want to mention before we sign off?
No, I think we're good. Anyone needs any more information, they know where to find us, www.firstmininggold.com, or, you can always reach Paul, the
Yeah.
famous Paul Morris, Paul at firstmininggold.com.
Yes.
Yeah, lots going on. We have a very catalyst heavy next, 18 to 24 months here. So very exciting time. We'll be sure to be back in the basement again soon.
Well, the basement door is always open for you, Dan. And yes, I'd encourage the viewers, if you want more information about the company, Paul's email address will be in the description of this video. It's in the description of all my videos, but Paul is more than happy to talk to current or future potential investors. And Dan, thank you. And we'll look forward to seeing you next time.
That's great. Thanks, Ron.